Good morning, everyone. Welcome to another episode of the Mizuho Week Ahead. I'm Jingwen, market economist at Mizuho Bank. This week's theme is collective caution, fragile truce, and mixed signals. Central banks once again erred on the side of caution last week, opting to remain on hold as policymakers balance lingering inflation risk against growth concerns. The FOMC delivered a hold in a 9-3 vote, although Fed Chair Kevin Warsh's post-meeting comments did little to bolster expectations of further tightening, with higher real UST cited as evidence that financial conditions had already tightened. Additionally, latest reports of him proposing to reduce the frequency of the meetings from 8 to 6 could exacerbate fears of falling behind the curve in the near term and unanchoring inflation expectations into the medium term. The BOE also left rates unchanged in a 6-3 vote, with Governor Bailey downplaying the notion that policymakers were moving closer to another hike, despite a third dissenter emerging. The BOJ likewise stood pat as it assessed the impact of June's rate increase, while maintaining concerns about inflation remaining above target. On the data front, US growth and inflation releases delivered mixed signals. Growth moderated, but domestic demand remained resilient, and inflation continued to ease, reinforcing expectations that the Fed is unlikely to hike rates in the near term. Geopolitics remain a key source of volatility. Over the weekend, President Trump called off strikes on Iran with the condition of being able to rapidly make a deal, which aided the decline of oil prices to around $83 a barrel. Meanwhile, the OPEC Plus reaffirmed another symbolic increase in crude output for September, which reverses their previous cuts in 2023. The potential flood in supply, should oil flows resume, will add further downside pressure on oil prices. Elsewhere, concerns on AI financing weigh on sentiments, with Nvidia's circular financing and Meta's disappointing earnings. Sentiments improved after strong Microsoft results, reassured investors that AI-related capex is translating into revenue growth. In China, reports of progress in domestic DUV lithography production underscored continued advances in semiconductor self-efficiency, while memory chip maker CXMT surged on its market debut. Meanwhile, the Politburo meeting broadly met expectations but carried a modestly positive tilt through renewed support for the property sector and flexible workers. There was also coordinated US-Japan intervention in the forex market, which resulted in the dollar-yen plunging from 164 to sub-158 on Friday. Together with a joint statement from Japan and US reinforcing the scope for further intervention, this round of intervention has the hallmark of a more effective backstop for the yen. That said, it still falls short of sustained bullish yen inflection given wider geo-economic risk. In Southeast Asia, Singapore's MAS delivered a modest increase in the Sing dollar near slope, while Bank Indonesia Governor Peri Warjio's surprise resignation raised concerns about policy continuity and central bank independence. In Australia, softer headline inflation provided only limited relief as underlying price pressures remain sticky, keeping the prospect of further RBI tightening later this year alive. Looking ahead, markets will focus on developments in the Middle East, US labor market data, and another week of AI-related earnings. We expect RBI to remain on hold despite mounting inflation, currency, and external balance pressures. Indonesia's Q2 GDP growth is likely to moderate towards 5%, while Philippines' growth is expected to remain soft amid weak consumption and net exports. All in, markets were shaped by collective policy caution, a fragile Middle East truce punctuated by renewed flare-ups, and mixed signals across growth, inflation, and AI-related developments, leaving oil prices, rate expectations, and EM Asia FX highly sensitive to the next headline. For more information, please refer to our Week Ahead publication or contact your respective sales desk and RMs. And for regular notifications on our market views, please subscribe to our channel and hit the notification button. Thank you.